Hi, hello, how are you? Once again, I am welcoming to this video lecture. On the request of my dear student friends, I have prepared this video. I am hopeful you will enjoy in this video. And this is Dr. A B JENA, Senior Assistant Professor, Fakirmon University, Balasore, Odisha. So, the financial market. So, before starting the financial market, suppose you are interested, you will purchase fruits, or you are interested to purchase vegetables. Where you will go? You will go to vegetables market, then you can purchase the vegetables. Similarly, you will go to the fruits market, you will purchase the fruits. Similarly, suppose you are interested to purchase the financial instruments or the financial market, financial instruments or the securities, you will go to where? The financial market. So market is the get together between the buyer and the seller. Seller will sell the product and the buyer will purchase the product for the consumption purposes. Similarly, okay, dear friends, come to the financial market. What is this? It refers to a market. So financial market, it is a market, and the marketplace where the buyers and sellers, the buyers and sellers, I mean the savers and the investors, there will be the get together between the buyers and the sellers, savers and the investor. They will participate in the trade or in the trading. Trading means buying and selling of securities. Yes. So it's a place where the financial instruments or the financial assets will be sold and purchased between the buyer and the seller, or the savers and the investors. So before discussing the different types or kinds of financial markets, let's have a little bit discussion about the importance of financial market and the role, the functions of role or the functions of the financial system, which we have already discussed in the previous video lecture. So these are the important, the significance of the financial market or the importance of the financial market, or you can also say the functions of the financial market. First one is the financial market will help for the economic growth. How it is possible? So the financial market will mobilize the savings from the savers and will give the funds, both the long term fund and the short term fund, to the borrowers. Who are the borrowers? I mean the investors or the business organization or the companies. Second one, so here also the financial market will also help to the savers for the investment, and the savers can be the investors in tomorrow. So next one, importance of financial market. The financial market will also help to the investors for the savings purposes also. Investors for the savings as well as growth and development of the business. Next one, the financial market will also help the business to raise the money to expand the business. As we know, the primary objectives of the business is not to maximize the or to earn more and more profit, but also the growth, development, modernization, expansion, etc. Okay. Next one, it's the financial market will also help to determine the price. So in this situation, both the buyer and the seller can know about the price movement. Accordingly, the sellers of the securities or the issuer of the security will sell it, and the customers or the savers will purchase the securities. Then financial market will also make the provision for the liquidity. Liquidity means the securities or the stocks can be converted into cash. Okay. The regulators are there. The SEBI, Securities and Exchange Board of India. In another video, we will discuss about the role and the objectives of the SEBI and the other functions. Financial market also help to save the time as well as the money. And nowadays, what is this? The financial market or the financial system will make what is this? The provision for the payment systems, means both the buyer and the seller or the issuer of the securities and the buyer of the securities, they can make the buying and selling or the trading through the banking or through the online. By its both the savers and the investors, I mean the issuing company and the customer, they can save their time, valuable time and the money. Okay, so these are the importance of the financial market. Let's move towards the what are the different types of or kinds of financial market. So normally it's divided into 4 parts. First one is on the basis of the maturity, second one on the basis of the seasonality of claim, third one it's on the basis of delivery timing or the timing of delivery, and last one is on the basis of organization structure. So we will discuss one by one. So it's a very interesting, dear friends. Okay, first on the basis of the maturity of the security, on the basis of maturity of security, it's divided in 2 parts, money market and the capital market. So money market is a market where the monetary instruments can be sold and purchased, and the popularly, so these are known as, that is the commercial paper, commercial bill, certificate of deposits. So these are the examples of money market instruments. So the market which provides fund for the less than 1 year. So normally the seller, I mean the issuing company, will sell the money market instruments mainly to meet its short-term financial requirement. Second one is the capital market, the market which provides the long-term requirements. More than 1 year, the issuing company will sell the capital market instruments. So these are the shares, debentures, bonds, public deposits. So these are the examples of capital market instruments. A company will issue to raise the long-term fund to meet the long-term financial requirements for the growth, development, modernization, expansion, merger, acquisition purposes. So next, on the basis of the seasonality of a claim, it's divided in 2 parts, that is the primary market. So primary market, or we can say the primary market, it's the new issue market. It is a financial market where the issuers means the company, it may be the Shell, it may be the Reliance Industry, or it may be the GAIL, or it may be the Axis Bank, like, so they will sell the securities in first time to the general public. So in the market, in the primary market, the company or issuing company can sell it to get the right amount or required amount of a fund. Secondary market, it's popularly known as the stock exchange, dear friends. Secondary market is the market where the securities that have been previously issued in where the primary market, I mean those securities have already been sold in the primary market. So these securities will be traded, sold in the secondary market, or it's popularly known as, that is the stock exchange, BSE, Bombay Stock Exchange, like this. Okay, then on the basis of the timing of a delivery, it's divided in 2 parts, that is the cash or spot market. Second one is, that is the forward or the future market. What is this cash or spot market? Immediately. So in this market, the delivery of securities will be done immediately on spot. And future, it's the second one category, on the basis of delivery of timing, it's a forward market, or we can say it's the future market. What is this? It is a financial market. The delivery of securities as well as the commodities happen at a future date. So in a future date, the buying and selling of securities or commodities will be there. In which market? It's the forward or the future market. Okay, next, it's on the basis of organization structure. So on the basis of organization structure, it's divided in 2 parts. First one is the exchange market, or it's known as the stock exchange. It is a financial market. It is a financial market in which both the buyer and the seller of the securities conduct trading. Stock exchange. In next, in another video, we will discuss in detail, that is the history, origin, objective, trading mechanism in stock exchanges. So detail we will discuss there. Then OTC, it stands for over the counter exchange. Over the counter, it's a OTCI for India. So very important. What are the instruments of money market? Once again I am repeating: commercial paper, treasury bills, certificate of deposits, commercial bill. And who is the regulator of the money market? The RBI, Reserve Bank of India. And who are the players in money market? Mainly insurance companies, commercial commercial banks, mutual fund companies, discount and house, finance house of India. In a capital market, who is the regulators, the SEBI. Detail will discuss the difference between the money market and the capital market. Okay, so let's move ahead. We will discuss the difference between the money market and the capital market. Okay, let's friends discuss the difference between the money market and the capital market. So there are 11 bases of comparison point. By taking into consideration, easily we can compare, distinguish between the money market and the capital market. So first one is that is the borrowing term. So money market's borrowing term is maximum 1 year, and for 1 year it's a that is the for the short term. The borrowing period is short term and the maximum time period is 1 year. Whereas in the capital market, the borrowing period is more than 1 year, and it is the borrowing term is a long term. Come to the second one, who are the participants in the money market and who are the participants in the capital market. Normally the central bank, RBI, Reserve Bank of India, commercial bank, mutual fund companies. So they are the participants in money market. In capital market, who are the participants? Stock brokers, retail investors, underwriters. What is the meaning of underwriter? So underwriter, some specialized financial institutions. So they will make an agreement with the company in the case of if the minimum shares will not be subscribed or the debentures will not be subscribed by the public. In this situation, unsubscribed shares or securities will be subscribed by the underwriters. So underwriters are the specialized financial institutions. Okay. Next, what are the instruments of money market? Treasury bills. In next, in other video, we will discuss in detail promissory notes, commercial paper, etc. What are the instruments of the capital market? So normally the shares, preference shares, equity shares, debentures, bond, etc. The structure, what is the structure of money market? The structure of the money market, it's a more informal, because there is no specific marketplace for the money market over the telephone, or internet, online. The money market, money market instruments or the activities are normally being carried out. Then in the capital market, it's a more formal. We will see that in the NSE National Stock Exchange, OTC, over the counter exchange of India, BSE Bombay Stock Exchange and other regional stock exchange. The SEBI is there. SEBI, it stands for Securities and Exchange Board of India. Then the classifications of money market, there is no classification of money market, but the capital market normally it's a classified, it's a divided, like the classifications are primary market and the secondary market. Liquidity, the money market is more liquidity being the short term money market instruments are normally traded. And in the capital market, so comparatively that is the less liquid because it's a the long term, borrowing term is a long term, that's why. Okay. Then next one is a risks. So money market, in money market we will find there is the less risks because it's a there is the more liquidity, so that's why there is the less risks. But in the case of a capital market, we will find or will bear the more risks because the investment in capital market instruments, it's a for long term, so that's why it's a more risks. Next, that is the what is the purpose of money market. So for the purpose of the money market, so money market is the market where the company can raise the fund to meet the short term financial requirement, whereas a company will raise the long term fund to meet the long term financial requirements. Next one, it's a that is the returns. Returns means return means that is the interest. So as compared to the capital market, in money market it's a the less return, and in the capital market the return will be or is more as compared to the money market. And what are the relevance? Relevance, on the basis of relevance to economy, money market helps to boost the liquidity in economy, whereas in capital market converts the savings into the productive instruments. It's a last the basis of comparison is that is the maturity period. We have already discussed in details in money market, that is the maturity period is maximum 1 year, but in the case of capital market the maturity period is more than 1 year. So these are the difference between, on the basis of the comparison, the difference between the money market and the capital market. So once again, thank you to all. If you like this video, kindly you like it, kindly you share it, kindly you forward it, and the PDF of this video lecture is also available in the description links. Once again, thanks a lot to all of you.